You know what? I'm not leaving. I'm not leaving. I'm not fucking leaving! The show goes on! This is my home! They're gonna need a fucking wrecking ball to take me out of here! They're gonna need to send in the National Guard, a fucking SWAT team, because I ain't going nowhere!
A big GM and welcome back to the channel. In today's video, we're taking a look at Bitcoin, the good, the bad, and the ugly here, but a bit of hopium at the end as well. During these times where we're seeing everyone going in for the kill on crypto markets, especially based in the US, well, it's time to really take note here and start DCAing down into our positions for the next cycle. So if you enjoy the content today, make sure you subscribe to the channel and let's jump in. So we start off here first and foremost with the good. The good being the DXY, the Dixie, the dollar index here is seeing a bit of a rejection from the 104 region and looks a little bit weak right now. Typically there is a positive correlation between DXY going up, risk assets selling off, but when DXY comes down, risk assets often get a bit more breathing room and don't do too badly during those times. Remember, we were certainly feeling the pinch back here, September, October 2022. We had a nice bull market movement here in the early parts of Q1 as DXY revisited the lows. And then more recently, we had moves to $30,000 when the DXY was down to the low 100s yet again. So as you can see from the chart here, lower high number one here, put in around the 6th of March that week. We come and tagged at around 106 on the Dixie. We then came down to the range lows yet again. And more recently, we pushed up to the 104s, a bit of a swing fail above 104 and now a rejection here at 104s. We're down to 103.5 right about now, and I would expect we come in to see at least the middle of this range, somewhere around 102s. But you can see just from the general trajectory of the chart, it is looking weak, it is looking tired. Not something we can directly take home to the bank. However, it doesn't mean Bitcoin has to rip if this does show weakness, but it's one of the many facets in the market right now we're looking at to build an overall picture. Let's move on to the bad. So this is the S&P 500. As you can see from this chart, it doesn't look bad at all for S&P 500 investors. It looks pretty damn good, to be honest with you. You can see these higher lows being put in since the actual bottom of around that middle of October time. Another low put in here, pushing on up to 37.64, and then again another low put in around mid-March here. Again, you could argue there's a bit of a low put in here, or at least a consolidation pattern. We haven't seen a true pullback since that mid-March time though. It just has kept ripping up this market. So the bad in this instance is the fact that not everything goes up in a straight line. We can expect a bit of a rejection at some point and a bit of a pullback. This is the weekly time frame on the S&P, and we would say that there's quite a bit of traffic in here at around 4300s. So maybe a little bit more room to run here for the S&P. Maybe if you get an extra bullish somewhere around the 4400 levels, somewhere up there could be the next port of call before a bit of a retracement. So maybe a move extended up and then we get to put in a macro higher low somewhere in around here. But the point being that we've seen a lot of crypto weakness even during this time that the S&P 500 has moved on up. So if we do see a bit of a retracement in the S&P 500, this is probably not going to bode too well for Bitcoin and crypto assets more widely. But the hopium on the S&P 500 is the fact you may see some fund managers almost having to actually put some risk on here. From the lows, the S&P is up over 22.8% there. And then from the recent low, the March meltdown, as we had all those banking failures, the S&P has pumped a total of almost 13% there. So as things keep pumping, price does attract more people into the market. It's hard to say to your investors, we haven't allocated to this when it's up double-digit percentages, as investors are expecting returns from fund managers. So a bit of hopium on that front. But also, if you just look at the all-time high here, we're not a huge deal off all-time highs for the S&P, which is kind of crazy. But again, you're seeing this 11% away from all-time highs, but you're seeing this across the globe A lot of stock markets are at all-time highs already, which is pretty astounding stuff and really just shows you how messed up fiat currency is. With all that mass money printing, people have to put it somewhere. There's too much money out in the wild. It's hard to put the genie back in the bottle. People are allocating to stocks even during times of recessions. The Eurozone is in a recession now officially. Commercial real estate crises. You're seeing a lot of underperforming businesses out there, close to collapse potentially, but still prices are going up. So I think it's pretty safe to say that fiat money is not doing so well. And this is very indicative of that. And now for the ugly. So BTC chart here does look pretty ugly for the following reasons. We clearly had some insiders capping the price on Bitcoin recently. So during this time frame, the start of June, stock prices going up, Nasdaq ripping to new highs. What we were seeing is Bitcoin getting sold off time and time again. And you have to ask yourself, why was this? And this to me stinks of insider trading, or at least insider knowledge. Price just kept getting capped until we saw the big drawdown here, as we had the Binance being sued by the SEC and then Coinbase being sued by the SEC news here. You can see those insiders were shorting this market, selling off all the rips, and then we got the actual sell-off there. And then you can see it kind of Dalai Lamaed its way back up due to the fact that's a lot of short covering. Hopefully some of these guys with the inside knowledge did get blown out here, as they were expecting even lower prices, but it was getting baked into the charts prior to this. So this leaves us now with quite an ugly picture on Bitcoin, still in this chop period. Anywhere between $26.1 and $27,000 is chop. Above 27K, I think we start to get bullish yet again, hence the yellow line just by here, and then below the green down maybe towards the weekly support levels down here at around $25,000. But as it stands, we're still in this chop consolidation and people are getting bored to sleep at this moment in time. So all eyes on next week. So potentially we have a market mover, a catalyst here with CPI in the US coming out on Tuesday the 13th of June. Then if you just scroll down to Wednesday, the 14th of June, we have the FOMC deciding the Fed funds rate. And of course, Jerome Powell taking to the mic, 6:30 p.m. UK time there on Wednesday, June the 14th. So these are always market movers, maybe a bit of selling into this event, but pretty much I wouldn't expect a resolution to the range until this happens, to be honest with you, as it does seem the crypto markets need a catalyst to move either one way or the other at this point. So as you can see from this as well, the inflation rate here, 4.9% was the previous print. Expectation is 4.2%. Over on Trueflation, this is the one with the on-chain data supplied by Chainlink, 2.74% is the current rate according to this. So if we do get it coming in line with the government expectation of 4.2 or less, this could be that catalyst to propel the crypto markets up. And it does feel at this point we've had maximum FUD. What do we need more to take us even lower? Now, the prelude to the Bitcoin halving is, of course, the Litecoin halving. A quick check in here, 53 days out to that one. So from previous analysis I've done, and I'm actually going to do an update video on the Litecoin halving because this is an interesting trade. It typically does rip in the face of the halving event, but actually tops somewhere between 30 to 45 days on average before. We've only had 2 actual halvings prior to this one. This is a third Litecoin halving, so not too much data to go from, but typically it's a sell the news event and the rip takes place just before. Now, it does seem that we are far enough out to still have a bit of a rampaging move up for Litecoin, so it is a trade position I am monitoring at this point in time, looking to take a position if we get a bit of a retrace here prior to maybe the CPI data coming out. But if we just quickly jump into the Litecoin chart here, you can see it has maintained this structure of moving on up, stair-stepping its way higher and higher, capped at around 101, 102 here, a few drawdowns into this level. So if we did get a pullback to this trend line here, maybe low 80s if possible, that would probably be a good risk to reward trade going into the halving. However, the closer we do get to the halving date, the worse this trade becomes. Everyone positioning for the Litecoin halving is doing it for that narrative and that narrative alone. You don't want to be holding this bag into the actual halving event or beyond. It typically sells off prior to the halving and afterwards does a little bit poorly before going on and creating a new leg later in subsequent quarters. So do be aware of that trade. You want to get out of the narrative before the narrative point hits. So personally, I would actually put a timeline on this one to play out over the next 1 to 2 weeks only. I would not want to hold this trade beyond the next fortnight. Not financial advice. Then on to some 4 news. So channel 4 news here, sponsored by CZ of Binance. Binance US suspends USD deposits and warns of Fiat withdrawal pause. So what the heck is this news story about? Well, this is about the US dollar banking rails for Binance US being removed here. So they are looking for an alternative banking partner. Binance US has announced suspension of the US dollar deposits and notified its customers of an incoming pause to Fiat USD withdrawal channels as early as June 13th. In a post over on their Twitter, they stated the SEC has taken to using extremely aggressive and intimidating tactics in pursuit of an ideological campaign against the American digital asset industry. So what you're seeing here is, I believe, the end of an era for Binance US. They seem to be winding things down over there. Maybe they will get a new banking partner to do USD withdrawals and deposits, but it isn't looking very good. And it would make a bit of sense here to maybe sever the arm of Binance US to save the rest of the body and to keep away from the US regulators. Hasaka, as ever, was pretty hot on this one. This is from a few days back. Binance US, with the article stating they're removing 40 trading pairs and paused the OTC trading desk. And he said, look, accidental manifestation, so it begins. The time to sunset Binance US was actually a while ago, but now it does look like this is taking place and that they are going to be sunsetting the US version of Binance. But you have to ask yourself from a business point of view, is it even worth them keeping open a branch that is permanently getting bad news headlines, FUD, getting them into regulatory issues, and overall just being a net drain on their resources when it accounts for so very little of their revenues? I personally think that it is going to be the end of Binance US, but we'll wait and see if that becomes fact or not. So as Gary Gensler continues to make a move on the US entities trading cryptocurrency, we have the Streisand Effect in full here. And you may ask yourself, what is the Streisand Effect? So in psychology, it's the phenomenon in which an attempt to censor, hide, or otherwise draw attention away from something only serves to attract more attention to it. So this is the "we will fight you" stage of crypto and its adoption. Just before that, we win part. And what we're seeing is the regulators in the US continually come out and say crypto's bad. I think Gensler was stated as saying it's full of hucksters and fraudsters, for a weird term to use there. But when has the US government ever banned something that wasn't cool? It's kind of like China banning something. If China bans something, you want to own some of that stuff. So it's the same playbook being run out here by the US. And it is hilarious to watch. It's only going to draw more attention to crypto, and this just feels like a bottoming process here as we're hit by FUD left, right, and center here. Is there any more that we can actually take to push us lower? And that's the kind of sentiment here from Ansem. He says, I'm bullish. Crypto has reached a point in which it's big enough that the US government feels it necessary to try to restrict all access across the board. Feels like a hugely significant turning point when we will win all these legal battles, Ripple, etc., Coinbase, Binance potentially, not selling coins here. So that is the final message as per the intro. We're not leaving. Spark the Leo chest beating for the Wolf of Wall Street. I hope you enjoyed this one, folks. If you did, drop me a GM in the comments down below. If you're new, please do subscribe to the channel to help me out during these shitty times in the market. And I will see you in the next one. Peace.